Hello traders and welcome to another video review. Today is Wednesday, 28th of the July 2021. Let's take a look at the Forex calendar because it looks like we are going to be busy today. What are important data released overnight? The first is the consumer price index from Australia. As you can see, it beat the expectation 0.8% versus 0.7%, which is better than the last result of 0.6%. Of course, this is the data for the second quarter. The other data were from New Zealand, Australia as well. Weighted median and 3-month median CPI were both in line with the expectations. So it looks like the inflationary pressures are starting to pick up in Australia. During the London session, we have a GfK consumer climate and input price index data from Germany. Those that had been released already, both of them are worse than expected. GfK minus 0.3. Input price index is worse than last month, reading of 1.7%. During the New York session, we have important data scheduled for release as well. 2:30, we have consumer price index and the other sub indices from Canada. As you can see, the market participants expect the consumer price index to Canada to decrease from 0.5% to 0.4%. So any increase in this data will be a major surprise. Goods trade balance wholesale inventories are scheduled for release at 2:30 as well, but this time those data are from Canada. Crude oil inventories 4:30, and of course the highlight of the day, the FOMC interest rate decision statement and press conference scheduled at 8 o'clock. This is the key data for today. The market participants expect FOMC to leave the interest rates at the level of 0.25%. So, kind of a busy day today. We will take a look at the Australian dollar, we will take a look at the Canadian dollar, and of course we will take a look at the US dollar index. So let's start with the Australian dollar analysis. What do we have here? We have a very nice chart. Apparently I would like to zoom out for a second. Remember, we've been talking about a potential shoulder, head and shoulder formation that didn't work for the first time, but right now it looks like we are continuing this pattern lower towards this recent lows at 7,291 pips. So the major support 7,415 pips had been, as you can see, violated. 7,291 is the recent low, is it? Yes, this is the recent low. So right now this level is a major technical resistance. Okay, so this is the red level. Of course, this level of 7,353 will still act as a technical support, but the next target for bears is seen at the level of 7,244. If there is any sort of a surprise in the CPI again next month, then we can see some sort of a bounce. However, please take a look and pay attention on 7,415 pips the level, and of course the lower line level somewhere around 7,455-56. So those are the levels that will play major role during the bounce on the Australian dollar, right? So we got the top here, there you go, and we have this move down made already. I'm just wondering how much is here in terms of the Fibonacci retracement. Let me just take a look from this low to this high. We are below 61%, so right now I'm no longer interested in that, because it means we are starting a new cycle to the downside. The ultimate technical support is 6,992, which is the support tested last time in 2020 on the 2nd of the November. So please keep an eye on the Australian dollar. It looks like keeps going down. What is then Canadian dollar doing? Anything similar? As you can see, we got this nice bounce because the Canadian dollar was way oversold, right? Way oversold on the daily time frame. Now, very interesting thing, we have a bearish divergence between this high and this high, and as you can see, the momentum is the same. So someone needs to check it. Someone needs to call it again, and it looks like we have a dark cloud cover around the level of 1.2782. This is the biggest correction right now in the whole move up, right? How many percent do we have here? I'm just looking at the percentage. Okay, 13 bars, 17 days, fine, but I need the price range, of course. What do we need here? Is this, it will be around 2%, okay, 222. Okay, and this recent one was around 1.99, 2%, not even 2%, it was around, there you go, 1.89. So this is slightly bigger, this correction is slightly bigger than the recent one, which means, of course, we can be talking about a new cycle to the downside. Of course, right now this line here, the orange one, the orange line is preventing the bears to be more aggressive. But as soon as this level here, the recent support 1.2528, the lows of 21st of the July 1.2525, let's stick with that, 1.2525. As long as this holds, there is still a chance for a slight bounce. But if 1.2525 is violated, then we can go as low as let's say this level, 1.2490, and we need to adjust to the newest data. I think this level will be much more stronger. It is the level of 1.23. So this is nice zone here, 1.23, 1.2244, but please pay attention to the recent lows on the last week. If those lows are violated, we'll definitely go lower. Let's see if we have some kind of a channel here. If we can put some channel around here. It doesn't look like we are trading inside of the channel. At least we will at least we can do this wide channel here. What do we have else to say? Divergence, yeah, this is, I think, much more clearer to trade, right? We have a new high here, but this is, well, those are even slightly lower. So definitely we have a bearish divergence. Any breakout below the level of 1.2490 will result in RSI going lower below the level of 50. Let's put the level of 50 on our RSI graph. Let's stick with this, right? So that would be thick blue line. There you go, black one. Breakout here means anything below 1.2490 means that the market is in bearish stage of the correction. So US dollar index, how this US dollar index is right now performing. We're still counting on another wave up towards 93.42, but it looks like we are breaking lower already. Of course, the FOMC might distract this current price action. So far 92.32, which is the current technical support, hold, so that's okay. But if this level is violated, then please pay attention to another lower low, because we might get as low as here, which is 91.41. So everything is about the market market reaction on the today's FOMC interest rate decision and on the level of 92.32. If this level is violated, then definitely ending diagonal is over and we are quickly going lower towards 91.41. This is the first target for the price. We can remove these two lines here, no longer necessary for our analysis. And what can we do? We can just put one more line here, because we have a zone here. Please take a look. Higher highs, this is high, this is higher high, higher high, higher high, this is the high, lower high, lower high, lower high, lower high, typical for the ending diagonal structure, or the wedge as they see, the falling wedge as they say. So as you can see, we are right now in a very interesting place. Please keep an eye on the market reaction on 92.32. It might go lower towards 91.41. So that's everything for me for today amid the FOMC interest rate decision and Canadian inflationary reading CPI. So thank you very much for watching, and I hope I see you guys tomorrow with a fresh new analysis. So take care and bye bye.